Welcome back, guys, to a new live day trading episode. My name is Julius. I hope you're all well. We are back in the S&P 500. I'm trading 5 micro contracts here that equals the amount of $25 per point. Right off the bat, please make sure to leave a like on the video and subscribe to the channel if you're interested in live trading. I upload every Tuesday and Saturday. Alright, so let's get started. Market opens in 1 minute and it seems like I will trade this as a range. The market is clearly pullbacking from the low, so to say. So I will see this as the current about 12-point range. We're gonna buy the lows and sell the tops. 30 seconds left. I won't be too greedy here to go really completely to the last tick in order to go long. Should the market come down here, I will give it a little space and buy earlier, but right now it seems that we are first going long here, which is totally okay. Let's take a look at the footprint chart. What do we see here? No big liquidity yet. So first look at liquidity is done. Now I will get rid of it. I think it might distract me in the course of the whole trading day. Like a brief look at the beginning is alright, but liquidity changes during the day and I think it mostly distracts me from my fixed strategy that I'm trading. So we got the point of control here. Probably will move at some point since the volume is now really increasing. Oh, look at that. We had currently a little negative delta despite quite a bullish bar. So there are some active market sellers coming in. I will buy somewhere here at the 31, selling probably here somewhere at the 42. That is the plan. So we should be good with that. Over the course of the weekend, I studied a little bit more on this strategy and I worked it out a little further to really say, okay, I definitely want to trade ranges way more often than trending openings. So I really only want to trade a trending opening once the market is preferably really opening completely at the bottom or completely at the top of the current trend. And already a slight pullback might turn this whole idea into a range opening, okay? So one little pullback bar, okay, then it would be a hard choice if it's still a trend opening, but after 2 pullback bars, it's very clear that we are already in a range, okay? Because trend openings do have a much higher risk in my strategy than those range openings, so it's clear why I want to do that. All right, so let's give the market a little time to find one of those extremes. Currently, we are just trading right in the middle of it. Printing clusters here, printing volume. Already 30,000 contracts have been traded in the course of this 5-minute opening candle. Quite usual behavior here. Nothing surprising. We have to give the market a little bit of time. Okay, guys, so the first bar closed here. Pretty much where we were trading for the whole time in this 5-minute candle here. Nearby the point of control, it moved a little lower. Now let's see if this bar will be able come down. I should get ready in case the market gets fast to buy all of this, but we're definitely not there yet. So it seems like buying pressure from below is continuing. We found support here at the value area low, even though the delta is negative. So there are still active market sellers there. They want to see lower lows or at least a push back to the lows. I'm also waiting for that, but I would never open a short position right here. Yeah, seems like the market is still not finished going long here. So quite a big fight here on those price levels. Not the biggest volatility here today in the first few minutes of the market opening. So let's see if we are able to come back down. Okay, guys, I bought down here at the 32. I wanted to buy a little lower. We would have gotten a point lower, but I think that's no problem. Market got very fast, so I don't know if you saw that perfectly. Market went down here. I do not want to miss on this move, so I basically bought a little lower than the opening, or more or less at the opening, but yeah, that is what I'm doing. So we're gonna set a stop loss. This bar is closing in 2 minutes. We are gonna set a stop loss here, 1 tick below those lows here, and we're gonna trade this range. Yeah, I bought a little too early here, but keep in mind that I waited 40 minutes for this lower push to come. I waited 40 minutes. So it's quite hard to really have enough patience after 40 minutes to really wait for a lower push even. So I wanted to buy at the 31. Now I bought at the 32. Yeah, shit happens. Doesn't matter 1 point higher or lower. Stop loss is only 2 points away. So that is good. And now I want to see a continuation long, definitely. We bought more or less at the low of the range. Buyers are coming in. Delta is still very negative. We got a big absorption here in the lows. Look at this delta. I want to show that to you real quick. We got 1, 2, 3, 4, 5, 6, 7. Let's exclude this one. So 6 bearish deltas, negative deltas in a row, despite the market consolidating here. So there was a lot of pressure building up, and that pressure resolved itself here in this big push down. So despite having a lot of bullish candles here, we actually got 6 negative deltas in a row. That was quite interesting here. So now this one broke through. I bought a little too early, but in my opinion, it's better to buy like 1 point too high instead of missing out on this move. Like 1 point is still okay to be off, but shouldn't be more. Like that's also the difference between back testing and trading in a live environment. Okay, I waited here for 40 minutes, guys, and then in the very second that the market pushed down, this only took place like in 30 seconds. This whole push resolved itself. Okay, so I had to be there in the 30 seconds that this occurs. So I had to wait here concentrated for 40 minutes, and unfortunately sometimes that happens that I'm not able to buy exactly where I want to get the market. But that's the difference between back testing and live environment. In back testing, I probably would have said, okay, I bought here at the 31. Okay, let's be realistic. I would not get the perfect price, but maybe here at the 31. But in reality, I bought at the 32. So that's like, those are the little differences that accumulate to a big difference between your backtesting results and your live environment trading results. Okay, so keep that in mind. When you have a strategy that in backtesting works like just break even, then keep in mind that in a live environment, it may not be break even anymore, but rather in a little loss. Okay. So enough said. Currently entry is quite alright. Stop loss is set. We are in a $70 profit here. Now let's see if we can continue long. Hopefully the sellers had their fun here and now the buyers can take over again. That would be nice. But this is actually a pretty bullish picture. So we got a lot of pressure here. The bears had to go lower again to grab buyers from below, and we got a fake out of the lows. So we actually faked the lows here a little bit. We got stops that have been fished. We got here this little red square. Hopefully you can see it. It's a big absorption here. All of the sellers have been absorbed. It's a really bullish picture here, right from the book, so to say. But you see that people try to teach you those setups, okay? They try to teach you, we are waiting for a false breakout, yeah, for stop fishing, for a fake out here of the lows. You can see the stops have been fished. We get a big absorption here, and then there would be a great opportunity to go in long once the price reversing. Guys, that all happened in like 5 seconds. Okay, it went like down, down, down. Stops have been fished, fake out, absorption, right back up again. That happens so fast. So all of those people trying to teach you those setups, keep in mind that you won't get them so easily like they show you. Okay, this all happens very fast. Like here in an after the fact picture, it looks, of course, very promising, but yeah, keep in mind, it's actually really hard to get that. All right, so this is looking very good for us. I'm very happy with the current result. It's also, again, a perfect example of how patience pays off. I could have needed a little more patience to really wait for 1 point lower to buy the market, but it's also like I waited for 40 minutes, and then when the market was crashing down, I had to start recording again and immediately buy the market. So it's not too easy to be right there at the exact moment. But that is the real life thing I'm showing you here. How many people are showing you live trading on YouTube? Like such live trading moments. I think there's like way too little live trading. They show you their entry or their trading results after the day. Yeah, they review their trades. But I want to be live while I execute the trade. And that is quite sometimes challenging to accomplish, to get the recording started, to be there at the exact moment, wait here 40 minutes, stuff like that, okay? But I think it's worth doing to show you a real authentic example of how it's not that easy to get into the market. Now, some people of you might say now, okay, why don't you use limit orders here? Could have put in a limit order at the 31 and the market would have filled me at the 31 and I would have gotten a better price. You might be right on that. I'm not the biggest fan of limit orders. Not because in a previous video I accidentally put in a stop order instead of a limit order. No, not because of that, but rather because I want to see how the market is moving before I enter, okay? If the market is very fast, sometimes I want to let it run a little further before getting into my trade. And sometimes, of course, I'm missing out on a better price because I want to enter manually, okay? It has advantages and disadvantages. I tend to enter manually, okay? Because I want to see how the market is really moving. But you might be right, today would have definitely be a better result if I would have taken a limit order. So maybe in the next video we're gonna do it. I don't know, let's see. So far everything is working good. Also, if you'd like to analyze the footprint chart a little further, we got a finished auction here, so currently no big need to test those price levels again. So far, everything is working perfectly fine. Currently, we're finding support here at the value area, resistance here at the value area high. So probably this level will test it again here. Let's see if I'm right. Hopefully not, hopefully I'm wrong. But sellers are coming in. Maybe they want to test this 37 again. Like, those are the little things that I like to enjoy watching in the footprint chart. Okay, while we're waiting here, you can see how the delta is changing, if market participants are coming in, if you want to test specific price levels, if there's a finished auction or not, stuff like that, if you've got absorption, imbalances, clusters. But in the end, it's not going to change anything about my trading style. So if you not trading futures but trading CFDs and you just have a 5-minute chart in front of you, you can still trade very profitable. You might not be able to trade based off on a footprint chart, but like the 5-minute chart thing or the 10-minute chart thing or the 1-minute chart thing, I don't know which one you like the most. It's perfectly fine, so no need to switch to futures only because of the ability to see a little more. CFDs are totally fine. I'm not trading CFDs because I want to trade at the real stock market exchange, okay? And not with some shady CFD broker with its headquarters somewhere, I don't know, on the Seychelles. So I want to have my broker in London or in Chicago or in New York to really be sure about that and not on some shady place. I just like also the feeling of trading on a regulated exchange. Like in this case for the S&P 500, it's a Chicago Mercantile Exchange. I like to trade on that because, like, I don't know, for me, trading has to be a real job, and it just feels more like a real job if you're trading in Chicago on the Chicago exchange instead of some shady brokers somewhere in the world, nobody knows where. Okay, that's just my personal preference. Okay, if you like to trade CFDs, because we have to agree CFDs might be at some point cheaper than trading futures. Okay, you might not have the commission that you have in futures, and you might not have the data fees you have to pay for the futures, stuff like that. Okay, CFDs mostly are a little cheaper. For me, the feeling that I'm trading on a big American exchange is like worth more than the money I might save while trading CFDs. Enough talk, I'm talking way too much here. While the market is, we have to agree, moving in our direction, that is looking very, very good. We might find resistance first here, then we might find resistance somewhere up here, and in the end all the way up here. I don't know how long the market will last going in our direction. So far, I'm quite happy with the result. I had to wait a little for the entry, but I would be even happier if I would have gotten my desired entry at the 31. It was not the market that hindered me from achieving that, but rather just my mental state, my psychology, my actions that made me buy a little too early. So I'm not one of those guys that says you can never blame the market. But in this case, we really can't blame the market. We just have to blame ourselves, or in this case, I have to blame myself. But I'm one of those guys who say, yeah, I can really blame the market. I have a strategy that is working over a long time, so statistically, okay? So if I completely abide by the rules and, so to say, in theory, did nothing wrong, but the market is completely acting different than on a usual day, and even though everything speaks for a long market, I'm in a long position, I abided by the rules, and the market for some reason whatsoever is going short, then I can blame the market. I can let my frustration out. I can say, what the frick is going on? Why the shitty market is going short, even though it should have gone long. I get some bad comments again saying, that's the last time I watched you trading. You always blame the market instead of yourself. Yeah, guys, that's my take, okay? That's maybe why I'm a little different than other traders. I'm not afraid to blame the market if I do everything right and still end up with a negative result. In my books, I'm not to blame. But in this case, it's totally my fault. So $200 have been reached. Woohoo! That is looking very, very good. Keep in mind, this account with the open PNL, if I would trade for myself, I would not have it open, okay? I would never look at the result money-wise, okay? I would just look at the points that have been traded, but never on the money result. But for you, for a YouTube video, I think it's completely necessary that we show some monetary result here as well, because otherwise it would be very, very boring to watch. Of course, if I want to watch a trader on YouTube, I want to see how much money he makes. That is completely normal. So The open P&L is always activated for you guys. We are getting closer to those tops where I first had my range highs. So probably here at the 41, 42, somewhere up here, I would have probably sold the market. Wouldn't we be already in a long position? Okay guys, so we got two counter trend bars in this current long trend with pretty negative delta. So let's see if the third bar can change things around and go back to the tops here. That would be good. That would be the first opportunity for me to move the stop loss. But we would need quite some bullish power here to get right here at the 41.5 again. Delta is still negative, which means there are some passive buyers here, which is the first good sign. Now we would need some active buyers to really break higher. So the delta needs to change definitely to the positive. We are not there yet. This is no retest of the tops. I really want to see the very last tick here, the 41.5, before I would say that the tops are being tested again. Because that's quite a small retracement here, so we will definitely have to make sure that the tops are being hit or better exceeded again. So if you have a specific strategy that you're using, you should definitely make sure that it's all very exact, very precisely, so no questions are being left open. Okay, looking good so far. Okay, 2 ticks missing. Delta is looking very good, very positive. Okay, now this one is a finished auction here. I would want to see 1 tick higher. This is currently a hard choice if we are already at the tops. Like 1 tick off could be acceptable, but I much rather want to see the last tick, and it's not there yet. It's not there yet, and now this is really a hard choice here. Let's just hope that the market will just go back up here and it's not making our decision harder than it actually is. Whoop, and there's a sell-off incoming. I'm so unlucky here. Okay guys, so the strategy says once we are testing the tops again, I'm able to move the stop loss. But actually we did not test the last tick here. We are 1 tick missing. So I have to make quite a hard decision whether I want to already move the stop loss or if this retracement is not finished yet. All because of 0.25 points. But that is what trading is about, guys. You should be sure that you are ready to work that precise to make money out of the markets. So 18 seconds left. Come on, buyers, come back in, please. Do me a favor and close a little higher. I would really appreciate it. Okay, we closed bullish, which is the first good thing, even though the bar actually ended in a negative delta. Now let's hope that we can test this again here. There we go, guys. I'm very glad the market made it very easy for us. The highs have been exceeded, so I will now move the stop loss here underneath the lowest wick right here. Okay, so this is looking very, very good here. I cannot complain in any sense. Over $200 in front, stop loss is moved, so the chances are very, very high that we're gonna end up with a profit on this trade. So far, everything is working for us. I cannot complain here. Straightforward trading day. Only things that I had to wait about 40 minutes before we were really able to get into the position. Other than that, and of course that I'm like 1.2 early here. Other than that, everything is working perfectly fine. And I am very happy about that. Okay, so let's see if we are able to take out those highs, and then I would maybe already consider to end the trading video soon, because I was able to show you the basic entry strategy for today. The rest is just following simple rules. The hard decisions have been made, and the hardest decision is always whether we have a range opening, a trend opening, and where to enter. Okay, we are right here at its last tick, and we actually made new highs here. We did really make new highs. Wow, this is looking very good here. I'm very happy about that, guys. Over $200 in front, no losing trade here. Let's see where this candle can close in 30 seconds, and then I probably will end today's recording. Pretty simple day. We got some highs here, previous during the day, during the Asian session basically. So I don't know if the market is already at the point where it's able to break higher. Maybe not. Okay, I think I'm gonna end today's trading session. I think this could take a while here before the market is really able to break even higher sustainably. So I'm gonna end today's trading session with a profit of approximately $260. I think that is totally fine. I will trade, of course, until the market closes. So currently I'm holding on to this long trade as long as possible. Thank you guys for watching. For you, this session ends with quite a decent profit. Definitely make sure to leave a like on the video, subscribe to the channel if you like my authentic reviews of my live trading experience. This is no fake stuff. This is no after the fact stuff. This is a real life experience. Thank you guys for watching. See you in the next episode. Take care of yourself. And I wish you a pleasant trading week. Until then, bye bye.